Hi! Guess who is due an update on their portfolio? It's me, Vivi! So I have finally, this year I maxed out my ISA for £20,000, and it sounds like a massive amount, but given I have been a saver for quite a few years in a stupid minimum interest rate account at my bank, I'm pretty happy that I finally managed to invest all this amount and I'm not freaking out anymore. 15,000 was a big scare in my life, but 20,000, not a big deal. We'll just redo the same thing next year. So here we have my ISA. It's sitting at 21,432 in combined invested and cash. You can see I have invested 18,762, close to 19k in stocks and shares and funds and all the fun stuff, and I still have about £1,000 that are sitting as free funds, and that's just because I don't know what to invest those money in yet. I have them there, they're available. As soon as I see something drop in price, that's when I'll be like buying. The return is also really good. I can't believe the return is so good, given that I started investing only in like, what was it, March, April, I don't know, around that time, like late spring, and to see a 9.51% return, that's unbelievable. Like, I didn't think I'm gonna make more than 7,000. Of course this fluctuates. I've seen it over 10 and I've seen it below 7, but it's still a very good return, and probably that's mostly because I invest in funds and things that are big companies, secure investments, secure-ish investments, nothing very risky, so I don't see big fluctuations in my return. But let's just get into it and I'll show you exactly what I had in my portfolio. Okay, so starting at the top, I have AbbVie. Very good return on AbbVie, 22% increase. I've not put a huge amount in it, but it's one of the companies that have been performing well for me. Then I have Allianz, which I actually bought today. I've not put a lot of money into it because I'm not that familiar, but it seems to be a relatively good investment. It seems like it has a good PE ratio, a good value. So in the past week it has been going down quite a bit, and I thought like, oh, maybe I'll just buy something because it's going down. Maybe it's gonna pick up. Who knows? Maybe it's gonna continue to go down, but it seems like a relatively safe company. The financials look okay. I've not done a full research on it, so I don't know enough, but £300, willing to risk it. Like you see, I'm so rich, I don't need to worry about these things. Only joking, do your research. It seemed like an okay investment, but not something that I would put like my last £1,000 because I don't understand it that much well, but you'll see what I've put most in other things that I consider to be not more secure, but that I'm more knowledgeable in. Then I have AT&T, £870, again a little bit more just because AT&T has been in my portfolio for a while. I've seen it performing relatively well, like not a dramatic change from 1 month to another. I have a 3% return and it has been increasing. I have BP still here, still holding strong, ruining my profits. I do plan to sell all my oil investments, BP and Shell, at some point, but I also don't want to make a loss. Like, I don't want to make a £14 loss on it, so I'll just wait until it recovers a little bit. It's not a huge investment anyway, but something I'm planning to sell at some point in the future. Also, the dividends are really good, so not excited about being an oil investor. Exciting, not excited about being a oil investor, but dividends are really good, so I can kind of see the other side of why these companies' CEOs are polluting so much. Like, they probably like money just as much as I do, and empathy. This is also another company that I just bought today, Brookfield Renewable Partners. I just liked it because it sounded like a good renewable company, and I want more of those in my portfolio. I've not put a lot, £174. Made a small loss, but I just bought it like a few hours ago, so what would you expect? I just want to up my investment in renewable as I'm getting rid of my oil and becoming a more woke person. But also Coca-Cola is next, so we're getting there. It's all a work in progress. This £80 in Coca-Cola, not a huge amount, but 11% return, really good. I don't know why I didn't buy more in Coca-Cola. I guess I only bought a little bit of Coca-Cola when I was just starting investing, and then I might have gotten scared. I can't remember. I thought I invested more in Coca-Cola. Obviously not. Diageo 293, again 15% return. Really good, really happy with that. My only the only thing I'm doing, don't think I'm such a good investor and I know so much about these companies. I'm just buying when they're low, and I'm buying companies that are big and have good a good history of their financials and their investment, and it looks like a secure company. That's pretty much all I'm doing, and it's kind of embarrassing, so don't think I'm such a good investor because my numbers look good, because that's not all there is. Goldman Sachs 215, not huge amounts, very small amounts in companies, but once again 18% return. Really happy with it. I wish I put more. I wish I've put more in all of this company. Maybe the time is the most important factor on the financial market, so I can really see the difference. But even starting from late spring, I can see such a big difference. Greencoat UK, this is a green energy fund. It's making me a loss, but like I said, I want to become a more woke person, so it's worth the pain of seeing Greencoat declining for quite a while. And Intel, I bought a little bit of Intel, £318. It's going down still. They had a bit of a rough patch. I thought I'll just get in while they have a little bit of a rough patch, so I gained a little bit from their suffering, but obviously they continue to go through a rough patch, and it's just come on, I was supposed to benefit from this. Can you just get it together, Intel? I share core FTSE 100, 595. Again, good returns. I share core S&P 500, and I share global clean energy, which, mate, global clean energy, I've only put £5 because that was my phase of oil is still here to stay. I'm not ready to invest in renewable, but I kind of want to have a dip into it to learn about it and to see if it could be a future in it. And look at it, 48% return. I've only put £5, so I made £1.65, but renewable is the future. It might take a while, it might not be instant, but this was the first renewable clean green energy type fund I bought, and it has performed this well. So I'm quite biased, but I need to push through and accept that Greencoat is not doing great now, or other funds are not doing great now, but renewable, I think it's going to be good in the future, so I'm going to continue to invest in those. But again, this is not financial advice, it's just my opinion. And I share UK dividends. This is a fund I bought because I love dividends, as I have established in pretty much every video that I make. And 18% returns makes me very happy as well. I've put £569 in it, a good return. And then I share UK property. I like property as well, but I can't afford to buy property, so I invest in funds that invest in property because it's the poorest people choice. And at 8% return, pretty good. £1,000 invested, £85 profit. I'm okay with that. Johnson & Johnson, I only have one share, £113. It had made a little bit of profit, but I think it was negative this morning, so this one fluctuates quite a bit. I'll just ignore Johnson & Johnson for now, but it's quite a new investment for me. I just recently bought it as well, or not, maybe a few months back, but still relatively recent compared to the other ones. JP Morgan and Chase, I happened to buy this one when it was really low. They also went through a rough patch, and I was I'm gonna benefit from that, so just being the asshole of the financial market. But 22% return, pretty happy with that. I'm pretty happy with their rough patch. Glad you're doing better, JP Morgan. National Grid, I don't remember buying that, and it's in my ISA. That's worrying, but I don't think I received it as a free share, because in my ISA it wouldn't come to my ISA. I don't receive that many free shares as it is, so I can't remember how this got in my portfolio, but £8, let's just ignore it. That's nothing compared to the amounts we're talking about. But every penny counts, so once this gets into positive, I might consider selling it. And now we have Porsche, which is my newest interest. Apparently, I made it a spoof little video about Porsche, of analyzing their stock, and apparently now I'm really into it, so I've put £279. But again, this was the other day, so it's all very new. I am losing a little bit of money, but bought in a few days. You're not gonna see a profit that soon. It's okay, £279, and they pay good dividends, so I'm happy with that, and a little bit of exposure as well to the German market and European market, because I'm heavily invested in the US and UK, so I'm trying to find companies that I like in Europe or abroad to have a more geographically diversified portfolio. Realty income, one of my favorites, £460, not a great return yet. I just have, like, I think a few weeks back I bought £200, so I doubled my investment in this one, and it's my monthly paying dividend stock, so I quite like to see it every month. I'm getting like £1 from them, and that keeps me going. Give me crumbles and I'll keep investing in your company. Royal Dutch Shell, that's probably the moment I should be shelling it. I should be shelling it. I have a £4 return, £3, 3% increase in my investment, which is probably as good as it's gonna get, honestly, with oil, and because I want to step away from it, I think it's time to say goodbye, Royal Dutch Shell. But also I don't want to, because now it's in positive and I like that, and they're paying good dividends. But I'll move on. It's like I can never make a decision about this oil. I know it's not good to invest. I like the money. Secure income, 773. This is a REIT one, like Realty Income and Secure Income are REITs. They invest in property, and based on like the rent of the property that the fund makes, that the REIT makes, you're going to get a commission. So the dividend pay is really, really good, and that's why I have it. But also 13% increase in the investment. It's really good. SPDR and S&P UK dividend. Once again, a dividend fund. I tend to like those. Only £500 invested in it, but 4.58% increase. All positive. Makes me very happy. I definitely filmed this on a little bit of a good day. Like, I don't know if that's fair, but I film when I have time, so maybe I'm not giving the most, I am probably giving like the most realistic opinion, because I just pick random days, and this is how it is today. It's a good day for most of my investments. Taylor Wimpey, is this my highest? Oh no, the highest return was the £5 investment in green energy, like 48, but this is 36% increase. Again, really good investment, £150 profit for 557. Taylor Wimpey is a property developer. I don't know how they are doing so well. I was fully expecting this will completely crash this year with the pandemic happening, and I kind of bought thinking like, oh, it's gonna recover in a few years anyway, and I'll just I'm here for the long term, Taylor Wimpey. But they recovered so quickly and makes me happy. And then I have all my Vanguard funds at the end, which probably drive a lot of the profit, to be honest, because I have most of my money invested in it. The profits are not that dramatic because it's funds and you're going to have a moderate growth, but they're all positive, and they've all grown at a relatively expected amount given the current situation. I did buy in a okay-ish time, not at the time when the market completely fell. But when the market kind of halfway recovered, it's when I got enough courage to buy. So I have Vanguard FTSE 100, invested £5,826 with a profit of £542. Very good, I am very happy. And probably this was more recent. It was more recently that I started to invest so heavily in Vanguard. Maybe like September, I would say, like not that recent, or not that recent with such huge amounts for me. Vanguard FTSE all world, different companies all over the world, £1,725, 10% return once again. Vanguard FTSE, what do we have next? Emerging markets, that's just me wanting to have again more geographical exposures to other markets and not be so US UK centered. 11% return. And Vanguard S&P 500, which is the lowest return, but it's the most diversified one. So again, pros and cons. You get more diversification, more stability, but a lower return. So only a 7.98% return. Still good. I think it's still good, but it's lower than the other ones. And yeah, I've put 1,900 in it. And I think I'm pretty happy with my ISA. I think my ISA is doing amazing. I'm so proud of you, sweetie. Well done, sweetie. And I'll just show you, because I have a little bit more money invested in my invest account, and I'll probably continue to invest in this one in the next year. And once my allowance for next financial year in April opens up and I can invest again in an ISA, I'm just going to transfer these amounts into my ISA. So I also have like £4,167 with some free funds. Quite confusing with my free funds money floating about, because I'm not yet decided what I want to invest in. I'm quite struggling with making decisions. It's a bit of a pain for me. But I have invested £3,667 and a 3.8% return, much lower than the other one. But this is not, I'm not as heavily invested in funds. This is more like I'm buying different companies that I find interesting, and I don't really want to have them in my ISA because I'm not completely sure if that's a long-term investment, but also not. I'll just show you what I have. So it's just a mess. This is a bit of a mess. This is my dirty closet, actually. I have Astrazeneca, only £100. This is very small amounts. It's BP once again. I don't like this when I do this quite a bit, that I have duplications. I have BP in one and BP in the other one, but also my ISA is now maxed out. So if I wanted to buy more of something that's in my ISA, I need to do it in the other account. So I'm gonna have duplicates, which it's a bit annoying because I see them separately. I get my dividends paid in the different accounts, and it kind of bugs me, but you do what you do. When you're too rich, you have to deal with these problems. EasyJet, this was a free share, so thank you very much for using my links in the description below, because I get a little bit of one free share whenever you guys use the link. I don't have that many, but it makes me so happy when I see someone has used my link. And that means you get the same share. So if I get an EasyJet and you use my referral link, you also get an EasyJet or whatever other companies are offering. And I feel like that makes a little bit of a connection. I know when I get a free share that someone else got the same share at the same time, and it's quite beautiful, poetic. Then again, I share FTSE 100. I have a lot of duplicates. This is the account I started. I didn't start with an ISA, so I kind of left them there to see how they're doing. 6% return. I share core S&P 500, 13% return. The return is much better because I started earlier, so you can really see the value of time. I've put these amounts, they're ancient, they're like prehistoric, my first investments here. I share UK property, once again only £10, but 9.8% return. Johnson & Johnson, we have a duplication happening again to drive me mad. National Grid, this was definitely a free share, well, 3 free shares, so thank you very much for using my link in the description below, because I made £26 and I'm so rich, and I also lost like 6.95% of the free money I got. I don't know why I'm not selling them. I'm not really selling the free shares. I always said that I'm gonna sell them, like I'll sell them after 30 days because they give it to you and then you can sell them, get the money, cash out the money. I seem to not do that. I seem to like, I think the company is alright, I kind of keep it. And if it's small amounts, I'm also like, that's a small amount. I just want to see how this company is doing, and I'm gonna forget about it if I don't see it there, which I don't know, not the best investor, but this is my strategy. You're welcome. My baby Porsche is parked in here at £9.82. It's losing its value. I again once bought it like maybe a month ago. It's fine. I just, at least I bought this with the intention of telling people, do you want to see my Porsche? And then just being like, there it is. Do you like my Porsche? Royal Dutch Shell, £13. It's probably time to buy. It's probably time to sell. You know what? I'm just gonna sell. Oh, market is closed. I can't sell. You see, my intentions are pure. It's just the timing is not right. SAP SE, I bought this because it was crashing. They were having a bad day. And I was like, you know what? You know my strategy, SAP. I'm just gonna buy a little bit and help you out like a friend. You're doing well, sweetie. I use SAP at work and I feel like, I don't know, it just sounded like something would be so cool to have a more small stake in SAP since I'm already using them. I like to have companies that I know about and I use them because I feel like I can keep track of them. Like I'll notice at work if SAP keeps crashing, I'll go check. Is SAP doing, are you alright? Are you okay, sweetie? Secure income, duplications happening again, but only £17. Smile Direct Club, that was a free share that someone has used, and that's how I actually learned from this person. That I'm so sorry, I forgot the name of the person because they commented on my YouTube channel. But yeah, they were the person that told me, oh, I got the Smile Direct Club share, what'd you get? And then I was like, oh my god, are we getting the same shares all the time? That's so cool. But now, once I received this free share, I didn't know what Smile Direct Club is, but now I keep getting ads on YouTube about like sign up for Smile Direct. It's like a retainer company, at home retainer company. Very weird, don't trust it, wouldn't recommend it, but now I have it, so I'll just see how it's doing. I'm invested to see how their business grows. I'm an investor. I'm passionate about this. My baby Taylor Wimpy, 20 shares with a 5% increase. Tesco, almost forgot I bought Tesco. Only £51. That was like a spur of the moment thing. I made like £50 saving on my grocery shop in 1 month. I can't remember the month, but I was like, oh no, £50 on my grocery shop, I should invest it in a supermarket. And I just chose Tesco because it was the one with the highest like dividend pay, and they were like the lowest at the time when I wanted to invest. I thought it's gonna be a good idea, and it was £3, 3% 46 increase. They pay good dividends, so I'm happy with that. I should probably continue to, yeah, if I don't forget, next time I have money, I might buy a bit more Tesco. The Renewable Infrastructure Group, this is something I can't decide if I want to sell or not, because it's kind of a managed fund, so they have like a fund manager that it gets paid, and it's confusing me and I don't like that idea. But also Renewables, and it's only £12 in it, so until I make the decision, it's just gonna sit here and bother me every time I show you my portfolio. Unilever, I went a little bit crazy. I've put like £1,867 in Unilever. It had a return of £1.40. That was just because I had this money floating about, and I thought, you know what, Unilever is having a rough patch. I should support them, I should encourage them. And I don't know if this will be like a permanent investor. I'm not investment. I'm not that keen to keep Unilever 40 years and years, but if I see a good return on it, or if it's growing at some point disproportionately more than I bought it for, I might consider selling part of it and reinvesting the profit in something else. I'll see how it goes. And then to wrap it up, Vanguard, the FTSE All World Dividend, high dividend fund, pays good dividend once again, but 9% return, not a huge investment. But I think they're doing all right. We have a few that are really harming my portfolio overall, but nothing too dramatic. It's still on positive 3.80 general return overall. I am quite happy, and I think if 2020 was a mess and I am kind of a mess, at least my portfolio is doing all right. And one of us has to have a little bit of a better life, so I'm glad it's my portfolio if it can't be me. Thank you very much for being on this journey with me of learning about investing and growing our portfolios together. It really means a lot, and see you next time. Glad you dropped by.